We invested about $1.5 billion US dollars. We've announced over $1.5 million of investments since the beginning of this financial year, which is April 1. But that's more a function of the fact that when some of these initiatives have come to fruition. Some of these discussions have been going on for a year or longer, but it just so happened that they all happened over a period of 3 months. But yes, that is a reflection of our interest in this market, and it's a market where we hope to be able to continue to find opportunities to increase our exposure.
And one of the bigger one was the Schneider transaction, where you've co-invested along and acquired the business of L&T's electrical business, which is there. What was the rationale going into that kind of business? Because it's what, $750 million which you're going to bring in?
Well, it's in line with the themes that we like about India. So the low voltage switchgear business, which we're investing into, that clearly one of the end use markets is low cost housing, housing in general and low cost housing in particular. And that's clearly a segment we see significant growth in India over the next few years. Secondly, by combining L&T's and Schneider's business in this area, the idea is to use India as a manufacturing base to export to markets of Schneider around the world. So really, a combination of those two things were very interesting for us. And we found in Schneider a partner where we had a common goal for the business, and it made sense to come in and invest here in an area where we thought we could be invested in for the long term.
$1.5 billion since the beginning of this calendar year, fiscal year, and I saw a commentary from Temasek saying that you're going to go slow on investments for the next a year or two. How does it come into picture?
So let me first give you the context of the reason for us slowing the pace of investments going forward, right? One is that global growth is still very strong, and we expect it will continue to be so through 2018. But we do see the US entering a late stage in its economic cycle. We see the Fed increasing rates over the next 12 months and beyond to slow down the overheating in the economy. And at the same time, we see the impact of the fiscal stimulus this year in the US fading as we go into the second half of 2019. So as we go into 2019 and beyond, we do see a slowdown in the growth in the US. Similarly, we do see the impact of geopolitics, such as recent trade tensions, also could have an impact on investor confidence, investments, and therefore growth. So our concern is in connection with the slowdown in growth as we get into 2019 and beyond, which could increase the probability of a recession in the US, which history shows has significant impact on markets all around the world.
But if that happens, the Fed may go for a pause on rates, right?
They could. I guess the interesting thing is that typically when the Fed increases rates, the impact of a rate increase is seen on the real economy only 6 to 12 months from the timing of the rate increase. So the Fed has a very fine balancing act to increase rates just enough to slow down the economy, but not so much to tip it into a recession. And that's always a tricky balancing act. And when you combine that with geopolitical shocks, such as the trade tensions we're talking about right now, it's very difficult to strike the right balance, which is why we're not saying it's a certainty, but we're saying the risks of a US recession have increased significantly if you look out a couple of years. And because of that and the impact it would have on global markets, we are now looking to slow down or be more cautious in our pace of investments. Because we typically invest from at least a 3 to 5 year horizon.
Exactly.
So it's less relevant what happens in the next 6 months. What's more relevant what happens in the next 3 to 5 years.
So when you talk about a slowdown in investments over the next year or two, is it going to be a cautious approach towards entry into newer companies or looking at valuations, or you wanted markets to cool off before you pick up investments?
I mean, ultimately, we're looking at investments that would fundamentally give us value over the long term, right? So let's take for the next 5 years. So if we find opportunities right now at the right value, which we think are relatively more resilient to the type of risk that I sort of mentioned, I think we will continue to look at those opportunities. So I think you can continue to see investments from us. It's just that they would have to be more aligned with our themes and companies. For example, we made an investment in Bayer in Germany recently, right? It's the agrochemical business. It is acquiring Monsanto, has acquired Monsanto, makes it one of the largest players in the world. It's a space we're excited about and something which we do want to have exposure to in the long term. It's also a space which is going to be relatively more resilient in an economic downturn. Yes, on a mark-to-market basis, you'll be hit by a market correction. But ultimately, we see us giving us value in the long term. So we will still continue to make investments. And the flip side, of course, is if you do see a significant market correction in response to these risks, that itself could give us value. And then we'd be ready to put in money at that time too.
So as a long-term fund, you would prefer to have cash in hand and wait and watch approach?
Yes, we would like to have the flexibility to take advantages of the opportunities that may arise in such a downturn.
India investments, $10 billion till last financial year, and you said you added another $1.5 billion in the current financial year. It's been a slow and steady increase of India portfolio, right, for you?
Yes, I mean, in some sense, we've invested about an average of $1 billion over the last 5 years. I think for us, we see this as a long-term game. We see India as the fastest growing large economy in the world. And there are certain themes out here which resonate with us. So I think we will continue to be investing along those themes. And the idea is to do it on a steady basis right through. Ultimately, when we make an investment, it will be a function of bottom-up opportunities. So it's very difficult to say we will step it up one year or step it down the other year. But we do want to steadily increase our exposure in India, both in absolute terms and as a share of our overall portfolio.
One of the important aspects of investment in any company is governance. You ensure that they have good governance standards that is followed. In the financial services space, we have seen a couple of cases where one of the investment is yours as well in ICICI Bank. We've seen governance issues there. What is your view on how it's been handled and how it should have been handled?
Look, it's probably not fair for me to comment on a specific company. What I would say is that, for us, having high standards of governance is very important, but we're not involved in the day-to-day management of our companies. We expect the boards of these companies to sort of uphold those standards of governance, and we engage with these boards regularly, to feel comfortable that they're doing so. I just leave it at that. Clearly, in this particular case that you mentioned also, I mean, the board is taking steps to sort of do an investigation, and we leave it to the board to make the right calls out there.
NBFC space is also a very aggressive space for you. Fullerton is one of the investments I think you have in that space, and you're increasing it and increasingly looking at that space as well. And this is one of the sectors which has grown very fast within the financial services. Are you looking at more opportunities for any other NBFC?
Yeah, I would step back and say generally overall financial services is a space we find attractive. As you mentioned, we have exposure to banks, we have exposure to NBFCs, we have exposure to insurance companies, we have exposure to payments companies. So we are there throughout the ecosystem.
Yeah.
And NBFCs also play an important part out there. As you said, we have a large exposure through FICC, to Fullerton India Credit. And I think it's a space we will continue to sort of look at seriously.
So if I'm going to ask you, okay, tell me between these four units in the financial services space, banks, NBFCs, you have payments and insurance. Which are the segments which are growing much faster than your expectation?
So look, I mean, I would say they're all attractive segments.
No, I'm not talking about attractivity. You have already invested in them. I'm just saying which segment has outperformed your expectation?
I would say in general, if you look at the newer spaces, right? Because if you look at banks and NBFCs, I mean, that's something that has been continuing, a trend that's been continuing for a long time.
Yes.
Some of these companies have actually been growing consistently at over 20% a year for the last decade. So in that sense, their continued growth has not been a surprise. I would say some of the areas like insurance and payments, where the takeoff has been more recent, and you've seen a certain inflection in growth in the last few years, that probably has surprised a little bit on the upside.
And does it mean that it allows you to have more investment in these two sectors?
I mean, we're looking at investing across these spaces, right? So I would say we would invest in all of them.